Hello and welcome to today's update. Today is 5th of October. You're looking at at an hourly chart of S&P 500. S&P 500 closed almost flat, down 7 points. It was down as much as 70 points earlier in the day. You can see that it was a very volatile session. S&P 500 closed right here yesterday and then gapped down and traded as low as this level, 37.20-ish level, and then it started rebounding and closed just where it finished yesterday, even though it traded just above that level towards the end, but wasn't able to hold on to the gain. It closed just below yesterday's close by 7 points. If we look at Nasdaq quickly, similar story. Nasdaq was down around 270 points early on, right here. Big drop, gap down, and then it continued to fall. And this decline had to do with what happened in the bond market. The yield started rising. As a result, it put pressure on stocks, so it gapped down. And when yields started to move lower, that's when the recovery started, and Nasdaq 100 recovered all of its losses and finished right at yesterday's high. It was down 9 points. It did trade above yesterday's high, but wasn't able to close at that level. If we look at the similar hourly chart for SPY and QQQ, so again, you can see that it had fallen all the way to around 370 and then rebounded to finish right at yesterday's high. QQQ also did the same thing. Now, if I look at the 15-minute chart, I wanted to bring something to your attention, which is, even though you see this strong recovery in QQQ and you see the same thing as S&P 500, you see that MACD doesn't look all that great. Yesterday when QQQ was right around here, MACD was here, and then price came all the way to the same level, but MACD is well below where it was yesterday. Even RSI, it remains, RSI was below yesterday. So I can see that there is a negative divergence formed in the 15-minute chart between price and the momentum indicators. Price made an equal high, but the momentum indicators made a lower high. The other thing of note is in RSI we see this bearish pattern on the 15-minute chart. So that corresponds. So this pattern is actually a bearish pattern. So what that basically means is that we might see some weakness tomorrow morning, at least at the open, based on this bearish pattern, based on the fact that there is negative divergence between the momentum indicators and price. Because this was a very strong move, it wasn't accompanied by momentum. You can see similar divergence in S&P 500 in SPY too. So this is SPY. You can see SPY made a higher high, in fact, from yesterday's. So it made a higher high, but momentum indicators made lower high. So you can clearly see that there is a divergence in the 15-minute chart. So I think this divergence means that we might have some weakness tomorrow. So that's looking at, let's talk about the support resistance levels. This is the support is obviously today's low right here, which is around 371. And resistance would be around 382 for SPY, and then around 389. So long as we don't breach this level, I think I can consolidate and then try and move higher. So these are the levels to watch. For QQQ, the corresponding levels are, So basically 382, 383 level here would be the first level of resistance, and then right here, which is around 386, and then around 291. Sorry, 283, 286, and 291. Support would be around 275. So looking at what I wanted to also show you is this chart. So this is QQQ at the bottom and the 2-year bond yield. You can see the bond yields, they started rising in pre-market. You can see, and by the time market opened, the bond yields were also started to move higher in the two-year note, and that's why we see this gap down in QQQ. Then bond yield reached a high of 420, and that's when QQQ bottomed right here. And then as bond yields pull back, you can see QQQ and SPY and the major averages, they started to move higher. You can see how the market is reacting inversely to the 2-year note. So it's worth keeping an eye on what's happening to the 2-year note. You see the 2-year note has pulled back, so it's now come back to an area of support right here. I mean, we could see a bounce from here. If we see a bounce in the 2-year note, that could mean that some pullback in the major averages. So keep an eye on the 2-year note. That would also suggest what might happen in the major averages. If we look at the daily chart quickly of them, just to see how the daily chart is looking. So this is S&P 500. So you see 3 green candles. It's now come to the 20-day moving average right here. It was extremely oversold. It fell well over 11% in a very short period of time. It was oversold. So this is basically a bounce from an oversold. You can see that RSI, which was in oversold territory, has moved up. It's below the 50 level. So it's now more in a neutral area. You can see MACD has crossed, and it's beginning to head towards the 0 line. So this is the 0 line. It's still well below the 0 line. So the momentum indicators are still weak, I would say, but improving. So this crossover is similar to what we see right here. The question is whether or not MACD, in June, gradually, rose and then went above the 0 line. So the question is whether it can do the same thing. If so, then obviously we can see a good bit of rally right here. So we'll see what happens in coming days. Now, I wanted to also bring something to your attention. If you just look at this area, and then we'll see how that area might be similar to what's happening. Now you see you've got 4 green candles, and then you've got this big red candle. There's a gap and then big red candle. So what happened was the market was moving higher ahead of the CPI report, last month's CPI report. Market was expecting the CPI report to be weaker than expected, so that's why market was rising. But the CPI report was stronger than expected, and then the market fell. SPY was down. This is S&P 500. S&P 500 was down 4.5% at that time. Now what we see is something similar. On Friday, we're going to get the unemployment report. And what's happening is that you see 3 green candles. Tomorrow is the last day before the unemployment report comes out. If we get another green bar, so it would be 4 green bars and then the report, similar to this. The question is whether or not we're going to get a red candle like this on Friday. Thing is, the labor market is quite important. As you know, the Fed has been talking about inflation and how strong the labor market has been, and the Federal Reserve is trying to slow down the labor market such that there is the imbalance that exists right now. Right now, there is an imbalance between job openings and the number of people that are available to work. So the Federal Reserve is trying to get a balance to these dynamics. So if the report comes in stronger than what the market is expecting, we could potentially see another big red candle similar to what we saw in the last CPI. So it's something to be aware of, and I think something we should be prepared. So if there is another green candle here, then I think risk management would be very important. And you'll see something like this in the other averages. So just wanted to bring this to your attention. Coming back to this is the area that I'm expecting resistance. So this is around. This is around. Let's see, around 3900, and you'll see that this area then brings the 50-day moving average in play as well. So this would be an area to watch out if there's further rally. If we look at Nasdaq 100, Nasdaq 100, this is the daily chart. So again, rebounding from last Friday's lows, it is just below it's come up to the 20-day moving average. So there is additional room for it to move higher. The resistance I see in Nasdaq 100 is this level right here, which is close to the 12,000, and that also brings the 50-day moving average in play. You can see RSI has moved up. It's still below the 50 level. So 50 level, if it goes above the 50 level, that would be positive. You can see MACD has crossed and started to move higher, but it remains below the zero line. So we need to see it cross above the zero line, something like this right here, which would make, so that the MACD would then be showing bullish intentions. If we look at the daily chart of SPY and QQQ, so again moving up, 389, 390 area is an important resistance level. 50-day moving average comes into play. There is the horizontal resistance. So that would be, so if it's able to get through that level, that would be quite positive, and that exposes the top of this channel right here. So we'll see how things play out in coming days, especially after the unemployment report. QQQ, so the level to watch out is this level, which is around 389-ish. We saw that on the so we saw it on our hourly chart, which is this level right here, 291, which right here, and that corresponds to this level right here, and that brings the 50-day moving average in play. Now let's look at the bond market and see what happened to the rates. So we'll quickly look at the futures, March and April futures. They're still flat. You can see that they're basically going sideways. Let me just remove the moving averages. They're going sideways. They had risen to 470, which is where the terminal rate sits. Federal Reserve said that they expect the Fed funds rates to be moved up to around 475 sometimes in the middle of next year, and then leave it there. So the Fed funds futures had rallied to that level, but since then pulled back a little bit, and they're kind of going sideways. I think we could see some reaction on Friday after the job report. If the report is stronger than market is expecting, then we could see these the Fed funds futures move up towards the 470 level. But if the report shows the labor market is weakening, then this could pull back a little bit, indicating that the Fed may not have to increase Fed funds rates to 475 to that level. So we'll see how things play out on Friday. The 2-year, you see, it has been pulling back since rising to around 432. It has been pulling back, but today it was up almost 5 ticks. It was higher. It was up almost 10 ticks at one point, but then gave back. You can see that MACD has crossed and moving lower. So that suggests that the rates might remain soft, at least temporarily. Again, I am expecting a reaction on Friday. The 10-year, this is 10-year. 10-year was up strong. It was up 12 basis point to 375. It's been pulling back, so and then so a bounce was expected. If you look at an hourly chart, you can see that it had been pulling back, and so today we saw this rebound, and then some softness towards the end. So that basically what pressured the stock early in the day. So we'll see how 10-year yield reacts to reacts on Friday after the jobs report. If the yield continue to go higher, we could see some pressure in the stocks. But if it pulls back, then we'll see some positive movement in equities. If we look at the dollar, so dollar bounced today because the yields rose today. So it found resistance at the midpoint of this channel right here. You can see that MACD is crossed and moving lower. RSI also has pulled back, but we are now getting into short-term oversold territory. So we could see a little bit of bounce. Again, that would be consistent with the bond yields. Because they've pulled back recently, there is room for them to rebound. So if we see some rebound in yields, we can see DXY move higher. Very much remains in an uptrend. Even if it reaches the bottom of this channel, it will still be within an uptrend. So there's nothing bearish about the dollar index. If we look at VIX, so VIX is now in the middle of this channel, which is 20 on the lower end and 37.5 on the higher end. So it closed down 0.37 to 28.70. Now I'd mentioned a couple of days ago that there was a bearish pattern forming right here, which did complete yesterday. It made a lower high and lower low, and this pattern is similar to mid-June right here. You can see it made a lower high, and then when it closed below this level, that completed the the lower high and lower low sequence very much right here. So at the moment, and you can see the MACD is now about to cross. RSI has been RSI also made a lower high, so it is looking weak at the moment. If we look at the weekly chart, I mentioned that weekly chart also was showing some weakness. You see this MACD, it's below, it's making lower high. It's just at the zero line. If it moves lower, then I think that would indicate that the momentum is weakening. So on Friday we could see some reaction, and we'll see how what the reaction is at the moment. But at the moment the setup is more bearish than bullish. But we are at the midpoint, so this would be an area, it broke through this level, so this could act as a potential support. So we'll see how that sets out in the coming days. If we look at oil, so oil had a good day. It was up 1.65. This news that OPEC Plus is planning to cut production. They want to boost the price of oil a little bit. You can see that it formed a falling wedge, which is usually a bullish sign. So it has broken through this downtrend. So there is now additional possibility of an additional move to the upside. The first area is 90, and then beyond that the resistance would be around 97. You can see RSI has been moving higher. It's moved above the 50 level. So you see it was a resistance right here, resistance right here, resistance. So it managed to go above the 50 level. That's positive. MACD, which had been in below the zero line, see it's crossed. It's now moving towards the zero line. So if it's able to cross above this, then we can see oil go up further in coming days. So this is looking positive for oil. If we look at gold, so gold is within this downward channel right now. So it's now moving towards the upper end of this channel. So it was down 4 points today. That's because dollar was strong, because bond yields went up. So there was pressure. it managed to close off the session lows. So this area is definitely going to act as a resistance, the top of the channel. So we'll see whether or not it can get back up to this. RSI is moved up strongly. MACD is heading towards the zero line. So we'll see whether or not it can cross above. But a lot depends on what happens to the US dollar. If US dollar rebounds, then we could see some pressure on gold. If we look at some of the sectors to see how they've done, so this is XLK, the technology sector. So it's been rebounding since last Friday's low, reclaimed the mid-June level. So it's now interacting with this downtrend line. So we'll see whether or not it can overcome this level. Energy was a big winner today. You see XLE, it's now broken through this downtrend. This is, this was supported by higher crude oil prices. We can see that momentum indicators are on the rise. RSI is gone above the level 50. MACD has crossed. Now it's heading towards the zero line. If it goes above the zero line, that would be positive. We could see additional, move to the upside. If we look at, let's see, XLF, which is the financial sector, so that also is quite constructive. So this area would be the resistance zone, which is 32.75. It managed to recover most of the losses today, so that's looking constructive. So we'll see how that plays out on Friday after the jobs report. Semiconductor, so it's been rebounding since reaching the bottom of this channel. It is oversold, so this is considered a bounce from the oversold level. So first level of resistance would be this middle of this channel. If it's able to get through this channel, then it exposes the top of the channel. But there would be other levels of resistance along the way. Support is obviously now the previous low right here. So it is looking constructive. I think semiconductors would move along with the overall market, especially the technology market. So if technology reacts positively on Friday after the jobs report, I can see further moves to the upside. Biotechs, so biotech, it's now come up to this trend line right here. So we'll see whether or not it can get through this level. The momentum indicators are still weak. You see MACD is below the zero line, and RSI is just about 50. So I'm not sure whether it has the momentum to get through, because these momentum indicators are not that strong at the moment. So I'm not sure whether it can punch through this level. So we'll see what happens in coming days, but it is at resistance with weak momentum. Let's see, let's look at some of the individual stocks quickly. So we look at Tesla. So Tesla continues to move lower. So and it's the support is at the bottom of this channel. Now it is oversold. Tesla, it's been falling from about 315 down to 240, traded as low as let's see, around 235 today. And if I bring in the moving averages, you can see that Tesla's price is now well below the daily 20 and 50 moving average. So it's now gone well below, which means that I would now expect Tesla to move towards the moving average. Anytime you see, like here, if you see right around here, the price was well below the 20 and 50. So you see there was a bounce right here, which brought it to the moving averages. Again, right here, you can see that it had fallen well below the 20 and 50 moving average. So 20 and 50 moving average acts as an equilibrium point. So it's like so there is a propensity to move towards that level. Anytime it goes either above or below from the moving averages, then there's a propensity to get back towards the moving average. So I would expect in fairly soon there would be a bounce of some sort at least bring it to this level, which is where the moving averages are. The momentum indicators are weak. You can see MACD is heading lower. It crossed below the zero line, not a good sign. RSI has been falling. RSIs are oversold. It's around 30. So this is an oversold territory. Stochastic is also in oversold territory. So there is room for a bounce. So I'm not sure that whether it will touch this line first, the support area. But even if it does, I would expect a quick turnaround. Because that means that it will be moving further away from the moving averages, and I would expect it to move towards the moving average fairly soon. Apple is basically in let's see, this is Apple is kind of in no man's land right now. So it's bounced off the lows, so it's in between the low and the moving averages, so it can move up a little bit more and get back to these moving averages. So this resistance right here is around 149, and then the moving averages will come. The moving averages, the 20-day moving average is around 150, and the 50-day is around 154. So it can move up to the 50-day, because right here again, similar to Tesla, when it was down here, it was quite a bit below the moving averages. So now we're seeing it move towards the moving average. I expect something like this to happen in Tesla, because Tesla is now well below the moving average. So I expect price to move up similar to what we see in Apple. So momentum indicators are still weak. You see MACD below the zero line. It hasn't crossed yet. RSI not even at 50. So the momentum indicators are still weak, which indicates that we might not see any significant rebound. Any rebound is likely to be short-lived. But things change. Just because they are weak right now doesn't mean that they will remain weak. If we have a big if Friday's jobs report is weaker than expected, then people can come back to Apple, and momentum indicators can change. But for the time being, they're weak. So these resistance would be tough to get through. If we look at Amazon, so Amazon is so I just remove the moving average for the time being. So the resistance is right here around 125, and then there is this downtrend right here. So those would be the two areas that we want to see it get through. First, the 125, because you can see there was this level was a resistance right here, it was resistance right here, it was support right here. So this level would I would expect some reaction, and then there's this downtrend. If it's able to get through those two, positive sign. If we look at Microsoft, so again it's moving up within the context of this downtrend. So resistance would be right around 252, 253. That also brings the middle of the channel in play. This would be a resistant area. You can see the middle of the channel was resistance right here, resistance right here. So I would expect some reaction right here. If it's able to get through this level, that would be positive, and that would bring this area into play. So this area is around 265 to 66. So that's Microsoft. Momentum indicators are moving higher. RSI has now come to 50 level. MACD is crossed, but remains below the zero line. So we need to see. So it'll move gradually towards the zero line. So once it gets above the zero line, then everything is going to be bullish again. So that's all for today. Thank you very much for watching the video. If you like the content, please consider subscribing. Thank you very much.